Welcome to Open for Business, the Gallatin Valley's only local business and consumer talk show featuring Tom Egelhoff, the Man Entrepreneur Magazine radio called the leading authority in the United States for doing business in small town. Here he is, speaker, author, small business consultant, and Mrs. Egelhoff's favorite son, Tom Egelhoff.
All right, welcome everyone. Open for Business. We air every Saturday live from 11 a.m. to 2 p.m. Mountain Time on AM 1450 KMMS in Bozeman, 1340 KPRK in Livingston, Montana. If you'd like to be a part of the big broadcast, go to kmmsam.com and click Listen Live. The call-in number during the show, 406-522-TALK, 406-522-8255. I'm here, you're here. Let's get the show on the road. All right, thank you, Dan. Welcome, everyone. 67 degrees outside, April 27th, 2013. It's 25 minutes till the top of the hour. I want to welcome you to the podcast portion of Open for Business. Each week I share some tips and tricks I've learned over the years about advertising, marketing, promotion, and building a strong, successful business. So I do these podcasts live every Saturday between 11:30 and noon, Mountain Time, right here on AM 1450 KMMS in Bozeman, 1340 KPRK in Livingston, and on the World Wide Web everywhere at kmmsam.com. So you can also pick us up using the phone app Radio Pup. So if you've missed any of my previous podcasts, you'll find them on my website at smalltownmarketing.com. It's just went into one of the top 100,000 websites in the United States. So go about halfway down the page, and on the left side, you'll find a link to the podcast page so you can catch up on anything you might have missed. So, well, today I'm going to talk about advertising, specifically how to create a business-building, money-saving advertising budget strategy for your business. So advertising, probably the toughest part of any business. How much to spend, where to place the ads, how often, what message to send, and who am I going to send it to? Now, it's not possible to answer all these in one podcast, so I'm going to deal with the budget creation today, and we're going to start today determining how much to spend on your advertising. Now, the most common question, or the most common answer, I guess, to this question is, how much have you got? Well, as most business owners know, advertising has a way of depleting your bank account very quickly. So if I asked 100 small business owners how much they spent on advertising, the most common answer would probably be a percentage of gross sales. And this not only works for advertising, but it works for most other budgets too. So here's how the percentage of sales method works. You start by taking your total last year's gross sales, or if you don't have a last year, use average industry standards. Next, you divide that total proportionally by month. So for example, if your gross sales were $100,000 for the previous year, and you did 10% of that business in January, then you allocate $10,000 or 10% to January advertising. You do that for each of the other months, and chances are, if you're a retailer, the bulk of your advertising probably done in the final 3 months of the year. You might have some during the summer months. And if you're not comfortable figuring that out, then a common advertising budget is 2 to 5% of your previous year's gross sales. That'll do for a start. If you're new in business, you could obtain industry standards from associations or trade magazines devoted to your type of business. You can also find most of the resources you'll need online. Just Google how much to spend on advertising for a landscaping business, paint store, bakery, whatever business you have. One of the main reasons most businesses like this form of budgeting is the safety factor of it. Rather than having to predict the future and adjust, they're always dealing with a known amount. You could budget your advertising like you would insurance, rent, or any other fixed expense. Now, the downside of this method is an opportunity to capitalize on changing events or customer trends. So these are often lost due to the restrictions of the budget, which is tied to a set amount each month, not the current business climate. And that's why I favor the monthly allocation method I just described. It takes you a little longer to compute, but I like the advantage it gives you over your competitors by having some extra cash available during some better months. Another popular advertising budget method is the sales objectives method. Now, using this method, advertising managers will set sales objectives they feel are attainable in the current business climate. Advertising and promotions are then used as needed to help realize the sales goals regardless of what happened in the previous years. Now, the upside is that if the advertising is done correctly, it becomes an investment, not an expense, and you can fuel more advertising at later dates as the company grows and expands at a faster rate than it would with a percentage of sales method. It's also a great way to grow your slow months of the year and build a cash surplus for when your busy times come. The downside is that advertising based on a bad promotion or incorrect advertising can be very costly. Suddenly, future advertising becomes an expense, not an investment. And these kinds of costs can't be recouped quickly and may start a downhill slide that can destroy a company. So I would only recommend this method for those business owners that have lengthy advertising experience. One of the best ways to save advertising money is to use unadvertised in-store testing. So did you ever go in a store and find an unadvertised special? This is the store's way of testing the waters for a specific product or service. And if the product tests well, the store can then run future ads promoting the product, sort of like taste tests for food products. Another advantage is that several products can be tested against each other, and the winners are promoted with a greater expectation of success. So if you're a service business, you can test additional services at a discount to customers when the primary service is purchased at full price. Carpet cleaners might do a haul or extra room at no additional cost. Now that we've talked about the two methods for budgeting your advertising, it's time to look at how to put them to work. Advertising is like eating an elephant. It's done in small bites, not one big one. You'll want to run several small ads over a period of time rather than one large ad one single time. In most cases, the only time you would run a big ad once is during a weekend sale. So how much the ad costs depends on the answers to the following questions. All advertising must accomplish a specific definable goal. All advertising, you have to understand, what will this ad do for your business? What will this ad do for your business? For example, are you building a brand name? Or are you introducing a new product or service? Are you having a sale? What's the clear, definable goal to spend this money? What's the short-term benefit to the company of running this ad? And what are the long-term benefits? Is this ad financed by the percentage of sales method, or is it a sales objective percentage method? What's the dollar amount allocated to the ad? Are co-op funds available from your suppliers? What is the expected revenue that this ad will produce? Are comparable ads being run for competitive products? What size ad do your competitors use? Can you match your competitor's ad size? What's the specific time period for achieving the advertising goal? And lastly, what form of evaluation will be used to assure that the ad is working or not working? And that's the important part. Let's learn how to evaluate your ad results. Advertising that doesn't work is like an employee that doesn't work. It's costly. You must be able to track whether the ad is working or not and why it's not. So create a tracking sheet for each and every ad you produce in each type of media. This sheet will be filed with a copy of each print ad and the script for each radio or TV ad. Each sheet will contain two major tracking areas. Your first tracking area will be the history of the ad. When was it run? What medium? Radio, TV, newspaper, all of the above? What days did it run? What time of day? Was it run during drive time on radio or during the prime time on television? What was the cost of each run? What was the cost of the entire run for this ad? What amount, if any, did co-op advertising pay? Were there any art, production, or design charges attached to this ad? Now, the second tracking area you want to keep track of is, what is the goal of the ad? Who was the ad directed toward? Was it directed to new customers, regulars? Make sure the ad speaks to your ideal customer one-on-one. And were the projected sales met? If so, document as much info as possible for the next time. This is where the history comes from, what the ad did in previous experiences. Did you have adequate inventory on hand to supply the demand the ad created? Did you have proper staffing? In Montana, what was the weather when you did this? Were there other events that drew traffic to your selling area that might not be there the next time you run this ad? If projected sales were not met, why not? Again, there's no such thing as too much documentation. We need to know if the ad failed, why it failed. Was the poor performance of the ad due to competing sales by competitors? Just too many businesses offering deals on snowblowers that day. Were there better promotions or products available elsewhere? What about conflicting civic events? Were there any events that drew traffic out of your area? Was there an error in the ad? Wrong pricing, date, product? When the time comes to run this promotion again, the history of both the costs and the results of the ad will be readily available to review, and we can learn from each time we put an ad in the whatever medium we decide to put it in. This small amount of preparation can save you big money the next time you want to repeat this ad. So let's talk about some ways to prepare customers in advance for your upcoming promotions. So some products require education of the customer. Offering educational information to the customer does two things. First, it alerts you to the customers who have at least some interest in your products, or they wouldn't care about the info. They wouldn't request it. They wouldn't be asking questions about the product or service. Second, it demonstrates to them that you're an authority when it comes to this product or service. So offer free information about your business in your ad. For example, you might say, call now for a free copy of 10 common mistakes condo buyers make. Make the information specific to your own business, not generic to your industry, and make sure you use the information to separate yourself from your competitors. Let's assume you got a furniture restoration business. So if your competitor uses XYZ glue and you know it's cheaper and inferior, your ad might say, we use ABC glue exclusively because it's the best in the industry. You don't badmouth XYZ glue in your ad, just plant the seed of doubt in the customer's mind that anything less than ABC glue is questionable. Send out the information and follow up with a letter or postcard or call in a few days, volunteering some more information or a special offer. Invite the customer to see your business firsthand. Show testimonial letters and past successes. And if you have testimonial letters, post those letters or postcards around your sales floor. So some final customer questions. Keep an ear out for red flags when talking to your customers. Customers will use certain phrases to disguise problems they've had with other businesses. So learn the phrases for your industry and make sure everyone who comes in contact with your customer knows them. Make sure you address the common ones in your ads. For example, if you're a mechanic, a red flag phrase might be something as simple as, do you guarantee your work? Or do you return the old parts? Advertising doesn't have to be hard, but it does require study, testing, and planning. Most important lesson in advertising that almost everyone misses is tracking customer response and income produced by the advertising. Does it pay to advertise in the medium you've chosen? If it does, keep it up. If not, then consider a lesson learned and move on. And that's today's podcast. I do these podcasts live every Saturday between 11:30 and noon Mountain Time here on KMMSAM.com or 1450 rather, KMMS in Bozeman, 1340 KPRK in Livingston, and of course streaming worldwide at KMMSAM.com. And if you missed any of the previous ones, you'll find them at my website at smalltownmarketing.com. Just go about halfway down the home page on the left, and you'll find a link to the podcast page so you can catch up on any items there that you might have missed. Hang in there. This is News Radio AM 1450 KMMS in Bozeman, 1340 KPRK in Livingston, and on the World Wide Web everywhere, KMMSAM.com. And we'll be right back with more stuff right after this.